Are you or someone you know considering adoption? Or perhaps you already have adopted. In either case, that's great news. But there may be even more good news. Are you aware of the recent changes to the adoption tax credit and income exclusion and what they may mean to you? For many people, adopting a child is now more affordable than ever, thanks in part to the adoption tax credit and its many increased benefits. For starters, the maximum tax credit has been increased to $13,170 for each qualified adopted child. And the phase-out income level for taxpayers has also been increased to $222,520. But perhaps the best news about the adoption tax credit is that it is now refundable. And that means in 2010 and 2011, you may receive any excess adoption tax credit amount over your total tax liability as a refund, even if you have low or no tax liability. In addition, you may receive employee benefits related to adoption costs, which may be excluded from income and not taxed. But more about that later. For now, let's start off with the adoption tax credit. Your eligibility for the adoption tax credit, the amount of credit you can claim, and when you can claim it, are based on a number of factors. These include how much qualified adoption expenses you spent, the type of adoption, whether your adopted child meets the criteria to qualify you for the credit, and finally, when the adoption was finalized. Qualified adoption expenses include any and all costs directly related to your adoption, and which are reasonable and necessary for the adoption. Examples include court costs, legal expenses, travel expenses, and even meals and lodging. Keep in mind that you must maintain proof of these expenses in your records in case you're required to substantiate them. An eligible child is any individual under the age of 18, or any individual who is physically or mentally unable to care for themselves. But it does not include an adoption for a stepchild. For tax purposes, there are three types of adoption: domestic, foreign, and special needs. And different rules apply when determining the amount of adoption credit and the year in which you can claim it, based on whether the child is in the United States, a foreign country, or is a special needs child. If the child is a U.S. citizen or resident alien, then you'll take the adoption credit as follows. For expenses paid before the adoption is final, you'll take the adoption credit in the year after your expenses were paid. For expenses paid in the same year that the adoption is final, you'll take the adoption credit in the same year. And finally, for expenses paid in the year after the adoption is final, you'll take the adoption credit in the year when the expenses are paid. For example, let's say your adoption was finalized in 2010, but you paid adoption expenses in 2008, 2009, and 2010. Your 2008 expenses would have been taken on your 2009 tax return, the year after they were paid. Your 2009 and 2010 expenses will all be taken on your 2010 tax return. And keep in mind that the total expenses paid in all 3 years cannot exceed the maximum amount allowed of $13,170. If the child is a foreign national, as part of a foreign adoption, then for expenses paid before and during the year of the adoption, you will only take an adoption credit in the year when the adoption becomes final. For expenses paid in the year after the adoption is finalized, you can take a credit for those expenses in the year in which you paid them. Now, if you adopt a special needs child, then the tax rules are even more favorable. For expenses paid before the adoption is final, you'll take the adoption credit in the year after the expenses are paid, similar to a domestic adoption. For expenses paid in the same year that the adoption is final, you'll take the remaining maximum credit amount allowed for that year, regardless of the total expenses that you paid. That is, you get the full balance of the maximum credit on your tax return, regardless of actual expenses. Now, what if your employer provides reimbursement for your adoption expenses as part of an employee benefit program? How does that impact the adoption tax credit you might otherwise qualify for? Since your tax credit qualified adoption expenses do not include any amounts reimbursed or paid for by your employer reimbursement essentially allows you a tax break of up to $13,170. But you can still get a credit for an additional $13,170 in expenses. That's right, you can get both benefits, provided you have high enough qualifying expenses, and many taxpayers do. A common question that many taxpayers have is, what is the difference between the adoption tax credit and the employer reimbursed tax exclusion? The adoption tax credit is a dollar-for-dollar credit based on expenses paid, while the tax exclusion is a dollar-for-dollar reduction of income before taxes. The income requirements and the qualifications for the credit and employer assistance are the same. The employer reimbursed adoption expenses allow an eligible taxpayer an additional and larger tax break when the adoption expenses are greater than the maximum allowed for the tax credit alone. So which one should you take in order to maximize the benefits of the adoption tax credit? Well, the answer is simple. You can and you should take both. Again, provided you otherwise qualify. The tax code is very generous with adoption expenses and allows you to use the maximum employer benefit and also claim a credit for expenses paid with taxable income up to the maximum amount allowed. So if your employer offers the adoption assistance as part of your company's cafeteria plan, you should use it first. For example, if your employer allows an adoption assistance program for up to $13,000 in expenses, and yet you paid $18,000 for your adoption, then you can receive $13,000 in tax-free assistance from your employer and still claim a credit for the additional $5,000 you paid for the adoption. To claim the adoption tax credit, you must fill out and include with your tax return IRS Form 8839, Qualified Adoption Expenses, along with a few other pieces of information. Overall, it's pretty simple, but there's some important considerations to keep in mind. In summary, adopting is a wonderful thing, even by itself. But the tax benefits available, including an income tax credit and an exclusion from income for any employer-related benefits, sure can make the cost more affordable. And that's money you can use for other new family member needs. Be sure to remember these 3 points. There's both a tax credit and an exclusion from taxable income for employer reimbursements if you qualify. Documentation is key to the tax benefits, both for the expense substantiation and proof of adoption. So keep track of your expenses and save everything, even if you're not sure. And finally, the tax benefits are big, but can be complicated, so be sure to get some help. For more information on the benefits of the adoption tax credit, visit jacksonhewlett.com or call 1-800-234-1040 to speak to one of our knowledgeable tax preparers. You can also refer to the Adoption Benefits Toolkit available from the Dave Thomas Foundation website at www.davethomasfoundation.org for more information. Let us help make the most out of this wonderful thing and the adoption tax credit so you can get the biggest check you qualify for.